Hello, listeners. Welcome to the Pre-Market Update, the podcast powered by AI. I'm Joe.
And I'm Sarah. Today is February 13th, 2026. Let's dive in and see what's moving the needles this morning.
Thanks, Sarah. Starting with the domestic front, the signals for the Indian markets look a bit shaky this morning. If you're looking at the GIFT Nifty, it's currently trading around the 25,719 level, which is a significant discount of nearly 139 points from the Nifty Futures previous close. This suggests we're staring at a gap-down start for both the Nifty 50 and the Sensex. Now, we've just come off the back of the Q3 earnings season, and while the broader sentiment remains range-bound, the India VIX has seen a slight uptick, indicating some nervousness among traders. In terms of market movers, it's a tale of two sectors. On one hand, we're seeing a massive rally in the agrochemical space. Companies like Avanti Feeds and Godrej Agrovet are buzzing after strong results. On the flip side, the heavyweights in the Nifty IT pack are facing some heat. There's a growing concern about AI-related disruptions eating into profit margins, which has kept the tech index under pressure. For those tracking FNOQs, the Nifty has been oscillating in a narrow range. And with today's expected lower start, the 25,600 level will be a crucial support to watch. FII flows remain a mixed bag, and domestic investors are likely to stay cautious ahead of the global inflation data coming out of the U.S. later today.
While India looks cautious, the international landscape is incredibly vibrant, Joe, even if a bit volatile. Over in Tokyo, the Nikkei 225 has done something historic, breaching the 58,000 mark for the first time ever. It seems Japanese stocks are extending their post-election rally, even as other parts of Asia struggle. Speaking of struggles, Wall Street had a rougher night. The Nasdaq and S&P 500 both traded lower as strong U.S. payroll data dampened hopes for an aggressive Fed rate cut. Looking at Europe, the FTSE, DAX, and CAC 40 are preparing for a muted opening, largely weighed down by some heavy corporate news we'll discuss in a bit. In the commodities space, gold has managed to claw back some losses after a sudden sell-off, with dip buyers stepping in ahead of the U.S. CPI report. On the currency front, the Japanese yen is on track for its best week in over a year, fueled by confidence in Prime Minister Takaichi's fiscal policies. Meanwhile, the Singapore dollar is emerging as a top haven play in Asia according to Citi, as market volatility picks up. It's a complex web of movements, Joe.
It really is, Sarah. Let's zoom into some of those specific corporate stories in India. As I mentioned, the agrochemical sector is the clear winner today. Avanti Feeds surged by a whopping 20% following robust third-quarter earnings and the positive sentiment surrounding reduced U.S. tariffs. We're seeing similar upward moves in Mucka Protein and Sharda. It's rare to see such a synchronized rally in a single sector, but the improved trade outlook is clearly the catalyst here. However, the news isn't as bright for Indian tech giants like TCS and Infosys. There's a lot of chatter about AI disruption fears slamming software stocks. Interestingly, some contrarian investors are emerging, noting that valuations are at decadal lows and order flows remain strong despite the noise. We're also keeping an eye on the currency impact for Indian exporters. The Chinese yuan is poised to extend its surge against the Indian rupee. With India and China managing their currencies differently, this could create a bit of a pricing disadvantage for Indian firms competing in the same global markets. Finally, in the EV space, keep an eye on Tata Motors and M&M as they react to news of Xiaomi's massive success in the EV segment in China, which is resetting expectations for the entire Asian auto industry.
That Xiaomi story is actually a perfect bridge to the international corporate scene, Joe. Xiaomi's electric SUV actually outsold Tesla's Model Y in China this January, selling twice as many units. It's a huge wake-up call for the global EV market. Meanwhile, in Germany, Mercedes-Benz is feeling the pain of global trade tensions. They reported that full-year profits have more than halved, hit by a staggering $1.2 billion in tariff costs. They're warning of very challenging times ahead, which is dragging down the entire European auto sector. In the US, the big story is the AI jitters. It's not just tech companies anymore. We saw trucking and logistics stocks like those in the Dow Jones Transportation Average drop sharply yesterday. This happened after a company called Algorithm Holdings released an AI freight scaling tool that investors fear could decimate traditional logistics business models. Also, in the consumer space, watch Nestlé and Danone. China's market regulator has ordered tests for a specific toxin in infant formula, which has triggered some precautionary recalls. And we can't forget the massive deal of the day. The US and Taiwan have officially signed a trade pact. Taiwan has committed to buying $84 billion worth of American goods, including energy and aviation products, while the US is lowering tariffs to 15%. This is a massive geopolitical and economic shift for the semiconductor and energy hubs in Asia.
That trade pact is definitely going to have ripple effects on Indian trade policy as well. On the broader economic front, JP Morgan strategists are now recommending a tactical trade to sell 2-year U.S. Treasuries. They believe the U.S. economy is so resilient that the Fed will find it very hard to cut rates as aggressively as the market initially hoped. This is why we're seeing the dollar remain strong and yields staying elevated. Closer to home, the RBI is likely monitoring the yuan-rupee divergence very closely. If the yuan continues to strengthen, it might give the RBI some room to allow the rupee to find a new equilibrium. Also, we're hearing from former Trump advisors that the U.S. is weighing a potential exit from the USMCA trade pact. If that happens, global trade routes could be thrown into chaos once again. For India, the focus remains on domestic inflation data and how it aligns with the Fed's higher-for-longer stance. It's a delicate balancing act for Governor Das and the MPC.
To wrap things up for our listeners, here are the key takeaways for the session ahead. First, prepare for a weak opening in Mumbai. The gift Nifty isn't lying, and that 130-point gap down will test investor nerves. Second, keep a sector rotation mindset. Agrochemicals are the current favorite, while IT and logistics might face continued pressure from AI-related news. Third, watch the global macro data, specifically the US CPI report due Friday. It will dictate whether the recent sell-off in tech is a blip or a trend. Fourth, the US-Taiwan trade deal is a big win for American energy and tech, so watch for any sympathetic moves in Indian companies with US exposure. Finally, keep an eye on the yen and the Singapore dollar as barometers for risk sentiment in Asia. It's going to be a volatile day, so stay sharp.
That wraps up today's update. I hope you gained useful insights to navigate the markets today.
Add your thoughts in the comments and follow us for more such updates. This is Sarah.
And Joe, signing off. Happy trading, everyone.